Hi everyone, welcome back to Tax Tutoring and Training. My name's Hannah, and in today's lesson, we're going to be going over credits you can take for education expenses and the qualifications in order to take that credit on your tax return. As always, the guided notes are linked in the description down below, so if you want to stay engaged and follow along, if you're studying for your tax preparer examination, that would be great. But let's get started to teach you about education credits. So what are education credits? Education credits are amounts that will be used to reduce the amount of tax that you owe on certain expenses paid for secondary education. And this amount is based on the qualified education expenses that the taxpayer incurred or paid during the tax year. And we'll go over on what qualifies exactly as an education expense, whereas what doesn't. But this is basically used to reduce the cost of higher education by reducing the amount of income tax you pay on it. And there are two types of education credits available, the American Opportunity Credit and the Lifetime Learning Credit. We'll be going over both later on in the video. But first, I want to go over the basic kind of qualifications in order to take both of these credits. So if you're a taxpayer wanting to try and claim this, you're going to have to meet these qualifications for both of them. So the first one, who can actually claim the education credit? Well, taxpayers can claim education credits for themselves, their spouse, and/or dependents who are enrolled at an attended and eligible post-secondary educational institution. Post-secondary means after high school. We're not counting grade school. It's after high school, such as college, trade school, etc. A post-secondary educational institution. And students must receive Form 1098-T, which is a tuition statement. If they don't, they have to fill out another form, but it's easiest if you as a taxpayer comes in with the Form 1099-T that either your spouse, you, or your dependent received from enrolling in a post-secondary educational institution. And the Form 1099-T usually is a tuition statement. It'll tell you how much you're paying for that college. A taxpayer may claim the credit if the student does not receive Form 1098-T, so long as they provide that information. So like we said. Okay. So the more basic requirements in order to claim both of these educational credits. So the taxpayer who wants to claim these credits cannot be claimed as a dependent on somebody else's tax return. You have to be filing your own tax return. You can't be claimed as a dependent. If you want to claim another dependent, that is okay, because that dependent could be your child or your qualifying relative if they're in school and they want to have you claim those expenses if you're paying those expenses. So say you're a taxpayer, you come in and you want to try and claim this education credit for your son who is in college, but he's paying these education expenses for himself. Because he's paying for himself, you can't claim those education expenses for the credit because they're not your expenses. You're not paying them. He is. And in order to claim this education credit is you cannot be married filing separately. That's just the one filing status that is off limit for this credit. If you are a taxpayer married filing separately and you want to try and claim this credit because either you're in school or your dependent's in school or your spouse is in school, you can't if you're married filing separately. Your AGI also must be below the limitations for your filing status, and the TaxSlayer software will calculate this if you're wondering on how to report it on the return. And these limitations are $180,000 if you're married filing jointly, or $90,000 for single head of household or qualifying surviving spouse. If you want to know more about different filing statuses and what that means for your tax return as a whole, go check out my video on my channel about filing status, and that'll be linked also in this video as well. Okay, and people who want to claim this education credit cannot be non-resident aliens for any part of the tax year. And if they were elected to be treated as resident aliens. Okay. When we're working with dependents, so the taxpayer who wants to claim the EC or education credit, and they want to claim it for their dependent because it might be a parent wanting to pay for their children's schooling, etc. So the taxpayer must be able to claim the student as a dependent in order to receive the credit for the student's qualified expenses. So if I was a taxpayer and I wanted to pay, and I was paying for my friend Billy's college expenses, I can't do that if I can't claim Billy as a dependent. If the taxpayer claims a student as a dependent, all qualified education expenses of the student are treated as being paid by the taxpayer as the taxpayer. So it's an all or nothing expenses thing, where if your student is a dependent, all the education expenses have to be paid by the taxpayer in order to qualify for the education credit. Okay, now what actually counts as an eligible post-secondary institution? So we talked about college, we talked about trade school, but what exactly does this definition mean? Can I go to my random made-up homeschool that I say is a post-secondary school? The answer is no. Any accredited public, nonprofit, or private college, university, or vocational school or other eligible post-secondary institution to participate in a student aid program administered by the U.S. Department of Education. So it has to be fact-checked by the U.S. Department of Education in order to be considered a qualified post-secondary institution for this education expenses credit. And which expenses actually do qualify as education expenses? Tuition and certain related expenses required for enrollment or attendance at the eligible educational institution are the only qualified expenses. So, for example, I go to college. So I'm a high school student. I'll be going to college soon. My mother will help me pay for most of my educational expenses. So say she's trying to claim me for say we're a freshman in college, she's paying for my tuition, she's trying to claim this educational opportunity, one of these education credits, sorry. And she's wondering, well, which of my college expenses actually count towards this credit? Is it my tuition? Is it my room and board? Is it both? Is it this one club fee that I had to pay? Can that count too? Only the costs directly going to enrollment at that school count for a qualified education expenses. So room and board and student activity fees, club fees, athletic fees, etc. would not count. Including student health fees, they also wouldn't count. Like I mentioned, some of the most common unqualified expenses include room and board, insurance, medical expenses, transportation costs, living and family expenses, any course involving sports, games, or hobbies that are not required. So the only education expenses that you can count towards this credit are expenses going directly towards enrolling in that institution. If you can live without it, it's not required. You don't claim it for the credit, basically. Okay, so some amounts will be excluded because you might be wondering, well, what if I have a scholarship that's paying for my education? Tuition and other education expenses that have been used to make scholarships, grants, or other tax-free, basically sums of money can't be used to figure the credit. So you have to ask the student or the taxpayer if their student has received any tax-free Pell Grants, Veterans Education assistance, tax-free parts of scholarships and fellowships. These things that aren't taxed don't qualify as an expense. So say I get a scholarship for $2,000 off my tuition. That $2,000 that's paying for my tuition can't be used to calculate this credit because it's not really the taxpayer's money. It's a scholarship or a grant or veterans educational assistance. Okay, so now we're going to be talking about the different types of education credits. And we mentioned there are two, which is the American Opportunity Credit and the Lifetime Learning Credit. So we're going to talk about the American Opportunity Credit first. And the American Opportunity Credit can be taken for taxpayers if they answer all these questions as indicated below. So at the beginning of the tax year, the student was still in the first 4 years of post-secondary education. At the beginning of the tax year, the American Opportunity Credit claimed for the student has not been 4 years. So a special thing with this credit is you can only claim the credit for 4 years. If it's been any more than that, then the answer is no, you can't claim this credit. Was the student enrolled in a program that leads to a degree, certificate, or other credential? So this is also special in that what the student has to be working towards must be a degree or a certificate or credential. They can't just be in school for fun. They have to be working towards something. And then, was the student taking at least one half the normal full-time workload for the course of study? Basically, are they a legit student? And has the student been convicted of a felony for possessing or distributing controlled substances? No, the answer should be no. And did the taxpayer and student have a taxpayer identification number by the due date of the return? So if the answers are listed below in the slide in italics, if they answered correctly for each of them, then they can claim the American Opportunity Credit. And we're going over how to do that. So the maximum you can take on this credit is up to $2,500 per eligible student. But this maximum depends, because it's a maximum, that's like the most anyone can ever take. But it kind of depends on your filing status, on your income, on your expenses. So how do you determine the actual amount that they can take on this credit? Well, the credit is calculated as 100% of the first $2,000 in eligible expenses, and then 25% of the second $2,000 in eligible expenses per student up to the amount of tax. So basically what this looks like is, say I pay $3,000 in expenses. So the 100% of my first $2,000, so $2,000 will be saved for this credit, and then I have $1,000 left. So the $1,000 that I have left qualifies as the second $2,000. So of that $1,000, I take 25%, which is $250. I might be wrong on that math, but let's say it's $250, and then that 250 would be added onto the first 2,000. So your total would be $2,250, and that would be the amount that you take for the American Opportunity Credit. If this 100% for the first 2,000, 25% of the second 2,000 is over 2,500, you just cap it at 2,500. That's the most they can take for this credit. Now, what's special about this opportunity credit is that 40% of the credit is a refundable credit, meaning that the taxpayer can receive up to 1,000 of that money, even if no taxes are owed. So, say you're calculating a return for this taxpayer, and they end up with no taxes owed, but they qualified for the American Opportunity Credit. Well, 40% of that. So say they had $100 in. This is just really simple, but say they had $100 for this credit, and their tax return ended up being zero. They didn't have any tax owed. They would be able to get a refund of $40 from the IRS because they have this credit. And taxpayers under the age of 24 can't claim the refundable portion of the credit if certain conditions are met. And then now we're moving on to the second type of credit, which is our lifetime learning credit. And in a lifetime learning credit, the student doesn't need to be pursuing a program that leads to a degree or credential. Felony drug conviction doesn't make the student ineligible, but only up to $2,000 so the lifetime learning credit is different from the American Opportunity Credit because its limit is up to $2,000, and it's a non-refundable credit. So you know that 40% that could be refundable, that could give taxpayers a refund or give money back from the IRS? Well, that $2,000 is non-refundable, meaning you don't get that refund. And because the non-refundable credit is limited at $2,000, that means you just cap 20%. So because it's a maximum of $2,000, to determine the actual value of the lifetime learning credit that a taxpayer can prepare, it's 20% of their eligible expenses. And the eligible expenses are the same as when we went over it in the first part of the lesson. These are expenses going towards sustaining enrollment at a post-secondary institution. And the lifetime learning credit is available for an unlimited amount of tax years, whereas the American Opportunity Credit only available for 4 tax years. And it's available for all years of post-secondary education and for all courses to acquire or improve job skills. And there's no minimum amount of coursework. And course-related books, supplies, fees, and equipment are also included in qualified education expenses only if they're paid to the institution as a condition of enrollment or attendance. So again, your qualified education expenses you have to have them, otherwise you can't go to the school. That's what a qualified education expense is. So you might be wondering which is better, because taxpayers can only use their qualified education expenses for one of those two credits. And in a larger aspect, they can only use those expenses for one, like once in their tax return. So that could be for their American Opportunity Credit, Lifetime Learning Credit, some itemized deductions, I think the example they give in the book was a business expense on Schedule C. Taxpayers can only use those education credits once. So, how do you determine where they should use it? Well, taxpayers benefit the most from claiming education credits. So, the American Opportunity Credit will always be greater than the Lifetime Learning Credit. So, if your taxpayer qualifies for the American Opportunity Credit, I recommend you recommending them to take the American Opportunity Credit over the Lifetime Learning Credit. All right, everyone. Thank you so much for watching. I hope you guys learned something about taking education credits and helping your taxpayers, clients with their income tax returns. All right, have a great day. See you later.